subject is financial accounting 2. In before classes we discussed topics here. What is the meaning of single entry system? Next is double entry system. What are the difference between single entry system and the double entry system? The next types of single entry system. What are the types? Types are pure single entry. The next is single entry in the popular sense. The next is limitations of incomplete records or single entry system. So, main topic is methods of ascertaining profits from incomplete records. Methods of under that methods of single entry system, there are two methods are there. No? One is statement of affairs or network method or comparison method. Actually there are two methods of single entry system. Another that one is statement of affairs or net worth method or statement of affairs or net worth method or comparison method. Comparison method. The next second one is conversion method. Conversion method. Okay, so these two are the methods of single entry system. In these two of the methods, mainly we will do the problems are relating to the statement of affairs method. Under conversion method is converting single entry system into the double entry system. So that now we will discuss the first method is statement of affairs or net worth method. Statement of affairs method. The statement of affairs method is in single entry system we will prepare only relating to the personal accounts. So that nominal accounts are not maintained under the single entry system. So that's why trading account and profit and loss account cannot be prepared. So that according to this method, increase in capital at the end of the financial year is attributed to profit. Okay, increase in capital at the end of the year, not beginning of the year. At the end of the financial year is attributed to the profit, and decrease in capital is treated as a loss in the absence of further capital introduced or drawings. So that therefore it is imperative to ascertain capital of the proprietor, the beginning of the year and also at the end of the year in order to ascertain the profit or loss for the business. For this purpose, a statement of affairs is to be prepared at the beginning of the year, at the end of the year. Okay, the statement of affairs is to be prepared at the end of the year or at the beginning of the year. Now see procedure. Preparing a statement of affairs statement of profit. The following procedure be followed. So another first step is a statement of affairs is to be prepared at the beginning of the year, to determine the capital at the beginning of the year. Then for first step is what? A statement of affairs is to be prepared at the beginning of the year. For what purpose? To determine the capital. Okay, we calculate the capital at the beginning of the year. This is step 1. The next is step 2 is A statement of affairs is to be prepared at the end of the year in order to, for what purpose? In order to ascertain capital at the end of the year. Okay, first step is we'll calculate the beginning of the year. Calculate capital at the beginning of the year. Then second step is what? We calculate the capital at the end of the year. The next step is add the amount of drawings whether cash or in kind to the closing capital as ascertained in step 2. Okay, the next is add drawings. Where we have to add these drawings is add the amount of drawings to the closing capital as ascertained in step 2. In step 2, we will calculate the closing capital. For this closing capital, we added drawings to that. The next step is deduct means less. Deduct the additional capital introduced during the year. During the year means current financial year. Okay, during the year, from the closing capital is ascertained in step 2 as ascertained in step 2. Okay, next is we will first is add the amount of drawings to the closing capital. Okay, in step 2 we will find out the capital at the end means what? Closing capital, that's called. We add the amount of drawings to the closing capital. Next is we deduct the additional capital. Additional capital means extra capital, so that additional capital is deducted. Okay, deduct the additional capital introduced during the year from the closing capital is ascertained in step 2. In step 2 it will be deduct the step number 4. The next is step Y is deduct the capital at the beginning of the year. Capital at the beginning of the year. The next is deduct the capital at the beginning of the year. From the adjusted closing capital. Deduct the from the closing capital to minus opening the beginning capital. At last step is make the adjustments to the profit or loss ascertained in step 5 with regard to interest on capital and salary of the proprietor or partner to arrive at net profit or loss for the year. Next is now see the state format means pro forma. Format of statement of affairs. Statement of affairs. Okay. Statement of affairs of any person's name, like that. As on means date. Okay, here as on date we'll calculate two capitals now. What are the two capitals? One is beginning capital and second one is closing capital. Okay, one is beginning capital. So for find out this beginning capital, in problems they will given the beginning values and closing values. For calculating the beginning capital, we are taken into the consideration relating to the beginning year values. For find out the closing capital, we'll take the values relating to the closing year, like that. Okay, so that make it 4 columns. Okay, this is the format or pro forma. Particulars, amount, particulars, amount. Particulars, amount, particulars, amount. Okay, first coming to the asset side. cash in hand, cash at bank, cash in hand, cash at bank, bills receivable, bills receivable, bills receivable. Next is trade debtors, trade debtors. The next is stock in trade, stock in trade. Stock in trade. The next is prepaid expenses, prepaid expenses. The next is fixed assets. Next is fixed assets. Okay, these are the assets. The next is liabilities. Assets. The next is liabilities. Under these liabilities, outstanding expenses, bills payable, outstanding expenses, bills payable, trade creditors, trade creditors. The next is bank overdraft, next is bank overdraft, and then next is loans. Okay, these are the liabilities. Okay, then what we find in statement of affairs method means we'll find out the capital. Capital is which side is getting, either asset side or liability side. Capital commanders. Okay, how to get this capital? It is an accounting equation. Accounting equation is equals to capital plus liabilities. Here we are, liabilities are there, assets are there, but capital is not there. Okay, then first add all these assets minus deduct these liabilities, we will get the capital. Got it? Assets first add all these assets values, next add all these liabilities. The next is from these assets we will calculate this liabilities value, we will get the capital. Capital amount, that is what? Balancing figure. Okay, in the statement of affairs, first suppose we will find out the taken into the opening balances. Then we will get the capital is opening capital. Suppose we will take all the values related at the end of the year. At that time we will get the closing capital. After this, format of statement of profit. These two methods are serving. These two pro formas are important while doing the problem. First we will prepare the statement of affairs. Under this we will find out the opening capital, closing capital. After that, format of statement of profit. Format of statement of profit. Under this, statement showing profit or loss of anyone name of the company year for the year ending. Here we will take the 2 years into there. Okay, whatever it is, one is financial year and second one is calendar year. Financial year means from the 1st April to 31st March is a financial year. The next is calendar year is 1st January to 31st December. Okay, so we'll take whatever given in the book question, we'll take that year. Okay, the next is particulars amount. Particulars amount. Here is first will be taken is at the capital at the end of the year means closing capital. So that is capital at the end of the year. Capital at the end of the year. Next is add drawings. We will add drawings to the capital at the end of the year. Means what? Closing capital. Add drawings. We will get some value for this. Less additional capital introduced. Less additional capital introduced. After deducting this, we get some value. This value is adjusted capital at the end of the year. Adjusted capital at the end of the year. Adjusted capital at the end of the year. After getting this value, again we will deduct it. So that is less capital at the beginning of the year. Capital at the beginning of the year. This amount also deducted. Then last we get some value. This value is, if it is getting in positive amount, it is a profit. Suppose it getting in minus values, so that is a loss. So that is profit. This is a profit or loss. Okay, this is a pro forma under this statement of affairs method. For first is what? First, another statement of affairs method. First we will calculate the opening capital and the closing capital. Okay, after find out this capital balancing figure, the next step is statement of profit or loss. Okay, so for this pro forma capital at the end of the year plus drawings minus additional capital introduced, will get the value is, that value is adjusted capital at the end of the year adjusted capital at the end of the year. Under that we less the capital at the beginning of the year. So if positive amount is coming, it is a profit, otherwise it is a loss. Okay. Okay, so I forgot to say one thing is, so this so now we'll discuss the methods of single entry system. Now it is also known as an approaches of single entry system. Okay, methods or approaches of single entry system, both are same. Under these approaches, there are two approaches of income will be there. One is transaction approach, then second one is balance sheet approach. So this balance sheet approach is also known as a statement of affairs. Okay, remember that is what the balance sheet. The balance sheet approach is also known as the balance sheet approach is also known as a statement of affairs. So this statement of affairs is also known as the balance sheet. Balance sheet approach. Okay, so this balance sheet approach, mainly balance sheet equation is what capital is equals to assets minus liabilities. Means first we add all the assets less liabilities, then we will get the capital. That is balancing figure. The next approach is the transaction approach. Under this transaction approach, when books of accounts are maintained under complete double entry principles of bookkeeping, this approach is followed. So this transaction approach is followed in double entry principles. Here we will see only single entry system now. So the transaction approach is under mainly double entry principles of bookkeeping. So this approach is followed. This approach is followed for determining the profit or loss. Determining the profit or loss of a particular period. Okay, in this approach, every transaction is analyzed. Every transaction is analyzed. Okay, there are following steps. First, record only transaction to the business. Every transaction involves two accounts. What are the two accounts? One is debit and second one is credit in the double entry system. After writing this transaction, the next step is what? From books of prime entry or from books of journal entries, we will prepare the ledger accounts, and after that ledger accounts are balanced. After ledger accounts are balanced, the next what we will find the trial balance. Okay, trial balance is prepared to incorporate this adjusting entries. The next is from the trial balance, nominal accounts are, whether any nominal accounts are there. From the trial balance, these nominal accounts are transferred to the trading and the profit and loss account. From this, trading account shows the gross profit, this trading account shows the gross profit, and the profit and loss account shows the net profit or net loss. Okay, this is our class today.